House prices are up yet again. What is going on in the market? We're going to cover that and more in this video. Now, before we jump into the data, make sure that you subscribe to this channel and hit the bell notification. We've got new content every single day. And make sure that you give me a quick like on this video. That will really help me with the YouTube algorithm. It'll take you 2 seconds, so smash that like button over there way here. So, Nationwide's data came out over the weekend and house prices are up. Now, not much, but they are up on a monthly basis. I know a lot of people are going to be triggered by this. The comments are going to be interesting, but keep it kind in the comments, guys. All I'm doing is sharing with you what's going on with the Nationwide data at the moment. But in the month of June, house prices are up. Not much, but we're talking 0.1%. There's been a ton of months where we've had 0.1% over the last few months, haven't there? Either up or down. But yeah, we pretty much shows that the market isn't really moving one way or the other for now. Now, this doesn't mean that transactions that are going through today aren't going to be discounted and we're going to see sale prices different by the end of the year. But stuff that's completed in June, according to Nationwide, is up 0.1%, which is interesting. Now, the average house price, according to them, stands at £262,000. On an annual basis, we are down. And that's primarily due to the end of 2022, where we saw some drops, back-to-back drops. We saw some big drops in some months. So on an annual basis, we are 3.5% down, which isn't here nor there really. So what is going on? Well, there's a lot going on really. The fact is that their belief is that the interest rate rises haven't really filtered into the market. And here's one thing that is interesting is they're saying there's still a possibility of a soft landing, which means that we won't have a house price crash. A house price crash is more than 10% in a year. And so at the moment we're at 3.5%, and they're saying that their data is showing that they feel that the market possibly might not have a crash, which is interesting. I know a lot of people will totally disagree with that, but the reason I like the data from the lenders is I feel that they've got data that nobody else has. So we talked last week about the land registry data. That has a massive lag, but that's the ultimate final data from everywhere. That includes cash buyers and mortgage products that are out there. Now, the reason I like the lenders to give us an idea of what's going on in the market is they know the applications that have gone through today. They know that the mortgages that have been agreed in principle. They know all of this data, and they're way bigger financial entities than any estate agent. They have more data than Rightmove, because Rightmove is just listing the properties, right? But that doesn't mean it's sold for that price. And a lot of people get quite annoyed when Rightmove data comes out and it says asking prices are up. Yeah, that's the asking prices, not the actual sold price. But Nationwide, Halifax, and all these other lenders, they know what's going through right now, don't they? So they can be quite clear and really understand whether the market is going to crash in the next year. And it's interesting to listen when they're saying they feel we could still have a soft landing. They have just their data. They don't have the land registry data that's come out because they don't know what's going on in the cash market. They don't know what's going on with Halifax data. But it is interesting to see that they're saying that. And I think we should listen to what they're potentially saying. Now, what else are they saying? They're saying that remortgages, on average, the increased costs to UK homeowners per household is £385 per month, which is considerable. Now, let's hope what could happen is as the energy costs come down, people have got used to affording the energy, and that was a difficult period of time for a lot of people, although we got some support from the government. The energy costs might go down. So if you think, look, maybe they're going to start paying 100 quid less energy. So this in real terms, money out of their pocket might be 280 quid. if that makes sense, right? And so what's interesting as well is there are still strong applications for new mortgages. So that indicates there's a lot of people that are quite positive about where the market sits right now. There's still people looking for properties to buy. So that kind of indicates to what they're saying is that the market isn't going to collapse anytime soon, because property is such a slow moving object. Now, we're not saying there's not going to be a house price crash. We're saying that in the near term, that's not looking as likely as some people might hope or want or expect, right? So what else is going on? Now, this was interesting data. This one is really interesting, and I've not covered this before. Percentage of pay going towards mortgage costs. Have a guess in the comments before I put this, where you think that is. What percentage of pay do you think we're at right now? Well, we are at 40% of pay. So 40% of pay, and that's in 2023, is going towards mortgage costs, which is a hell of a lot. So out of the 60% that's left, they've got to pay for their food, their holidays, anything for their kids, cars, not much. So it's high, it is high, but how does it compare to the last two crashes? Well, 2008, it was actually higher. And so in 2008, the percentage of money going towards your mortgage was 45%. Oh, sorry. Yeah, 2008 was 45%. And so that's interesting. So we're not quite at that level yet, although with more interest rate rises, we will get there. Now, here's the thing that's different to 2008. In 2008, very few people had fixed rate mortgages. A lot of people were on variable. So people are taking action now. And if you haven't taken action already, we've already done a video on this. You can fix your mortgage now. So the government has said, new legislation, you can get a good rate now and get that fixed. Log into your mortgage account and you will see the offers that you've got there. That's the smart thing to do, because interest rates are going to keep going up. Now, 1989, early 90s was a big property struggle. Interest rates were very high there. And so how was it then? Well, at that point, it got to 50%. In 1989, one of our commenters, Royston, who watches a lot of our videos, he said back in those sort of era, he struggled with property, and so he got a lodger, right? And you could do the same too. So you've got to look at options on how can you make life better for you and more affordable. You can actually, there is a government rule that allows you to have a lodger, and they can spend £7,000 with you. So you can charge them £7,000 if that's the going rate. Not going to be up north, but in London it is. And so you could get £7,000 tax-free from the lodger. And that would make affordability that little bit better for a lot of people. So you've got to do what you've got to do, right? And that's why we're saying in property investing, you've got to look at the different strategies, like HMOs, like serviced accommodation. Buy-to-let's going to be tough. So look at the strategies that do work in these type of markets. So in summary, the market is still really flat, although it's saying up 0.1% means nothing. Every one of you watching this, if you were buying a new property, could negotiate 0.1% off a property to get a sale done in this market if you wanted to. What else is going on? House prices, the average is at 262. We're 3.5% down for the year on an annual basis based off those drops that we had at the end of last year. £382 to re-mortgage, that's the additional costs for a month. And we're not quite, as a percentage of our pay, we're at 40% at the moment. Interest rates are going to go up. We will be, if we get to 45%, like we did in 2008, then we're way more likely to have a crash. And that's interesting to see what's going on. So let me know your thoughts on this. Where do you think the property market's going to be? Tell me in the comments. Keep it kind, but tell me, where do you think ultimately the market's going to end up? Where do you think it's going to end going to? Do like the video, do subscribe to the channel and hit the bell. Check out all the other content on my channel, including this video right here.